Just how serious is the real estate collapse taking place in our most populated provinces? For months now, headlines have warned that Canadian real estate could be headed for disaster. And the latest numbers out of British Columbia and Ontario are downright alarming. In these once red-hot markets, sales are stalling, construction is grinding to a halt, and confidence has evaporated. It is a massive reversal of fortune that has experts sounding the alarm. Just how bad is it? Consider these warning signs. Home builder confidence is crashing. In Ontario, builders of both single-family homes and condos are feeling extremely pessimistic. Some say it's the worst they've ever seen. In fact, for the first time, most builders believe that sales in the future will be even worse than the already slow sales they're seeing today. British Columbia is not much better, with builders also reporting a sharp drop in confidence. This level of negativity is rare and suggests that fewer homes will be built in the coming months, which could spell trouble for the housing market overall. New home construction has nosedived in Canada's biggest provinces. In the first quarter of 2025, housing starts fell 38% year over year in Ontario and 30% in BC, according to CMHC. The drop in the major cities were even more dramatic. Toronto's housing starts cratered by 65% in March compared to a year earlier, and Vancouver's fell 59%. In other words, builders are largely hitting pause on new projects in these markets. Year-to-date figures tell a similar tale. Through mid-2025, housing starts remain down 25% in Ontario and 8% in BC compared to last year. This collapse in building means fewer new homes will hit the market, a grim indicator for the economy and housing supply. It's not just builders pulling back. Buyers have vanished from many segments of the market. Home prices in Ontario and BC have already slipped down roughly 3% from last year, and sales are expected to keep falling into late 2025. The condo sector has been hit especially hard. In Toronto and Vancouver, condominium sales have plunged. Total condo transactions, resale plus new construction, are down a staggering 75% in Toronto since 2022 and down 37% in Vancouver. Pre-construction condos are sitting unsold. Toronto now has 58th month, nearly 5-year supply of units in the pipeline, 14 times higher than the inventory just a few years ago. And developers in high-cost cities are canceling or delaying projects en masse because units are not selling. In fact, Toronto developers saw a 40% drop in housing starts in June alone as buyer demand evaporated. These are flashing red lights indicating a severe pullback in demand in Canada's priciest markets. To say it simply, Canada's most populous provinces are experiencing a housing market meltdown. The once frantic bidding wars in Toronto's suburbs and Vancouver's condo towers have given way to eerie quiet. Listings sit on the market with few takers. Builders are shelving plans. The outlook, at least in these regions, is bleak, and it has economists and homeowners alike asking, what on earth is happening? Why the downturn? The perfect storm behind the crash. How did we go from boom to potential bust so quickly? Experts point to a perfect storm of economic forces and policy challenges that have slammed the brakes on demand in Ontario and BC. Affordability has hit a wall after years of price growth. Homes in Toronto and Vancouver simply became too expensive for local buyers. When the Bank of Canada raised interest rates sharply to fight inflation, borrowing costs surged. Suddenly, mortgages were far more expensive, and many buyers found they no longer qualified or could not afford the monthly payments. This rate shock squeezed demand tremendously in Canada's most interest-sensitive markets. Would-be buyers retreated to the sidelines, waiting for either prices or rates, or maybe both, to come down. On the supply side, builders are facing brutally high costs. The price of construction materials has spiked. The average cost to build a standard house is nearly $100,000 more higher than a few years ago. Developers in big cities also cite horribly high development charges and fees that make projects less profitable. With financing costs up and profit margins down, many builders see more risk than reward in starting new projects. Low confidence and low profit, fewer housing starts, it's a vicious cycle. Slow sales have hurt sentiment, and that poor sentiment is now reinforcing the pullback in construction. Broad economic fears are also chilling the market. Canada has been grappling with a trade war and tariff dispute that dents business confidence. In mid-2025, unemployment ticked up and talk of a mild recession grew louder. Fears of job losses are weighing on buyers' minds. People worry about committing to a house if their employment is not secure. The ongoing US-Canada trade tensions have a direct impact. Tariffs on steel, lumber, and other materials drive up construction costs and inject uncertainty. All this has created a cautious mood. Both investors and first-time buyers have adopted a wait-and-see approach, hoping conditions might improve later. As one economist put it, uncertainty has paralyzed the housing market. And just to wrap this thought up, let's chat about investors. During the peak years, investors and speculators played a big role in Toronto and Vancouver, often buying tiny condos to rent or flip. Now that prices have cooled and rents have stopped skyrocketing, many investors have pulled back. Smaller condo units geared toward investors rather than families are struggling to find buyers. The result, projects that once sold out in days are now sitting with tons of unsold inventory. Developers can't hit pre-sale targets, so they cancel construction. It's a dramatic turnaround from the frenzy of 2021. So in short, the housing downturn in BC and Ontario is largely a story of affordability and confidence. When homes cost over 10 times the average income and interest rates jump, something has to give. And we're seeing that give now. Prices dipping, sales stalling, and builders pulling back. Policymakers are watching nervously because a housing slump in these regions has big implications for the broader Canadian economy. It's no coincidence Ontario's economic growth fell to a crawl once real estate cooled. The situation truly feels urgent and dramatic, a marked shift from the optimism of just a couple years ago. But here's the twist. Not all of Canada is in free fall. In fact, step outside the overpriced urban hubs and you'll find a completely different real estate story unfolding. While Toronto and Vancouver grab headlines for their crash, another part of the country is quietly experiencing a housing boom. The prairie provinces are booming. Amid all the doom and gloom, Alberta, Saskatchewan, and Manitoba are bucking the trend in a big way. These regions have become an unexpected safe haven of growth in an otherwise faltering housing landscape. What makes the prairies so different? For starters, economic tailwinds are fueling real estate demand in the West. The prairie provinces enjoyed nation-leading economic growth in 2024, thanks to a surge in in-migration and strong commodities. Simply put, people and money are flowing into places like Alberta and Saskatchewan. An influx of new residents, many drawn by more affordable lifestyles and job opportunities in energy, agriculture, and mining, has boosted demand for homes. Unlike Toronto or Vancouver, these markets still offer comparatively reasonable prices and room to grow, which is attracting both migrants and investors, with more buyers coming into the market. It's no wonder the prairies are seeing homes sell briskly and new construction stay strong. Let's look at some of the striking numbers from the prairies, which stand in stark contrast to the slump elsewhere. Saskatchewan is experiencing nothing short of a housing rally. In June, 1,768 homes were sold in Saskatchewan, about 15% above the 10-year average for that month. A remarkably strong level of activity, with demand outstripping supply. Home prices have surged to all-time highs. The provincial benchmark price hit roughly $370,700 in June, an 8% increase over the previous year. In fact, Saskatchewan's housing market has been so robust that for 2 years straight, monthly sales have outpaced decade-long averages. Inventory is extremely tight. The province is facing its worst housing supply shortage since 2007, which has led to bidding competition and rapid price gains in many communities. Alberta, home to Calgary and Edmonton, is similarly in the midst of a real estate upswing. Home prices are rising steadily. As of mid-2025, Alberta's average home price of $525,000 was up about 4.3% year over year, reaching one of its highest levels on record. Buyer demand has been so robust that the province's market flipped back into seller's market territory with a sales to new listing ratio around 65%. That means listings are getting snapped up faster than new ones are coming on. Just the opposite of the glut seen in Toronto. Major Alberta cities have posted healthy gains. For example, Calgary's prices rose 3.7% year over year, and Edmonton's jumped 6%. This growth comes after a couple of blockbuster years for Alberta real estate, spurred by interprovincial migration and a strong oil sector. While the pace has tempered slightly, 2025 is on track to see further price increases. Compared to the deep freeze in sales further west and farther out east, Alberta's housing market is warm and active. Buyers are still buying and builders are still building. And unlike Ontario and B.C, the prairies have not hit the brakes on new home construction. In fact, they've accelerated. New housing starts in the prairies jumped by double digits even as builds plunged elsewhere. Through the first part of 2025, prairie provinces saw roughly a 24 to 32% increase in housing starts year over year. Cities like Edmonton, Calgary, and Winnipeg are leading the country in new building activity, outpacing even Montreal and vastly outbuilding Toronto. This means cranes are still dotting the skylines in these regions. Why? Local developers are finding that economics still work in the prairies. Land is cheaper, demand for family-sized homes is genuine, and projects can turn a profit. Many of the units being built are larger single-family homes or townhomes, not these micro-condos, which align with what local buyers need and want. The result is that while construction has stalled in Vancouver and Toronto, it's full steam ahead in cities like Saskatoon, Regina, Calgary, and the prairies in general. All this good news out of the prairies is a reminder that Canada does not have a single real estate market, but has a bunch of mini markets that can be independent of each other. But to generalize, we do have a tale of two tapes. On one side, the high-priced, formerly overheated regions are slumping. On the other, the affordable, growing regions are thriving. I hope you found this video informative and interesting. If you did, please consider subscribing to the channel to stay up to date with the latest Canadian real estate news and for unique strategies to help you pay your mortgage off faster and grow your wealth. If you enjoyed this video, you're going to love this one as well.